Common payslip deductions. Explained simply. Most people look at their take-home pay and accept it without ever checking what has actually been deducted, or whether those deductions are correct. Your payslip shows your gross pay and your net pay. The difference is made up of deductions, and every single one has a name, a reason, and a calculation behind it. Income tax is usually the largest deduction on your payslip. It is calculated on your taxable income, your gross pay minus your personal allowance of £12,570. The basic rate is 20% on earnings between £12,570 and £50,270. Your employer deducts this automatically, using your tax code. National insurance is the second major deduction. You pay 8% on earnings between £12,570 and £50,270, and 2% on earnings above that. It is separate from income tax and funds the NHS, the state pension, and other benefits. If you are in a workplace pension, your contribution appears as a deduction each month. The minimum is 5% of qualifying earnings. This comes out before or after tax, depending on how your scheme is structured. Your employer's contribution does not appear as a deduction. It is added separately. If you have a student loan, repayments are deducted automatically once your earnings exceed the threshold for your plan. For Plan 2, the most common for recent graduates, that threshold is £28,470 a year. The repayment rate is 9% on earnings above that. Some employees have salary sacrifice arrangements, where part of gross pay is exchanged for a benefit such as extra pension contributions, a cycle-to-work scheme, or childcare vouchers. Because it reduces your gross pay before tax, it lowers both your income tax and national insurance on that portion. This is useful when you are starting a new job and seeing these deductions for the first time, when a new deduction appears and you are not sure what it is, or when you want to check whether your deductions look correct for your earnings. A common mistake is accepting every deduction on your payslip without ever questioning it. That can mean paying more than you should without realizing. If something appears that you do not recognize, always ask your employer's payroll team to explain it. It is your money, and you have every right to understand where it is going. To recap, the main payslip deductions are income tax, national insurance, and pension contributions. You may also see student loan repayments, salary sacrifice, or other deductions specific to your employer or situation. Always check yours and query anything you do not recognize. Thank you for watching. Subscribe for more everyday money explained simply.